Hello, Big Trends traders. This is Price Healy with your weekly stock market update for this Monday. It's March 9th, 2026. The big story is oil. We've got the USO oil chart up, but of course you can see if we look at the markets today. It's about 2 o'clock on this Monday afternoon, a couple hours ago in the trading session, and stocks opened a lot lower on the heels of a big spike in oil above $100 a barrel. Now falling back below, but Dow's still down about 400 points. S&P down 0.5%. Nasdaq almost back to even, down 0.12, and then Russell 2000 small caps down the worst, 1.19%. Volatility index spiked up this morning, but back to about 28 or just sub 28. But we'll look at VIX as well here. But essentially, I want to look at oil and talk about the impact of the oil move. And, I always remind people that, a trend in motion tends to stay in motion, right? And so we've got a variety of things when we look at our breakouts outside of our bands here that we saw. This latest band buy signal on the USO, which is a ETF tracking oil prices, didn't exactly equate to the dollar per barrel, but you get the idea. 75.66 was the buy signal back on January 27th. And you can see that while we broke out initially up to about 80 there on the USO, we backed off, kind of retraced. We call these retests, these little pullbacks on percent R, these pullback points, a little bend down in the ADX that happened there about right around Valentine's Day. These little pullback CCI tests back under its plus 100 line right at the low on 217, Feb 17th. These and another near retest there for CCI on the 26th on this pullback intraday low, reversed back up by the end of the day, testing under that band, but coming back up. White big trends bands as well, holding this rally in place. Obviously today, big spike up to almost 124, open at 119.5, went to 124, now 111. What's happened is you look at the bottom line, we always talk about our DMI lines, the positive DMI in light blue, negative DMI in red, going way spread out, way diverging. Massive gap between that plus 70 on the DMI plus and just under 6 on the DMI minus. That's a spread of 64 plus points DMI difference, which is off the charts, unheard of, basically, when you look at this kind of a stretch, and you got to go back. Usually when you see them this stretch, obviously you're going to get some kind of consolidation. We usually would wait back till the DMI lines kind of converge back into each other, which could happen quickly or could take some time with a sideways to a little bit lower move. But bottom line is that all in all, we know that this oil price surge is obviously going to affect gas prices, continue to pressure them to the upside. And bottom line is that's a negative effect on the economy with the action going on in the Middle East. And bottom line is, of course, you say, well, what's the condition of the major averages? We've told you for the last several weeks, the S&P has been negative. We had the negative DMI test point back up there February 25th, right at that short-term high, and then backed off. We're above the 200-day average, getting close to it now. At today's low, we were 662, 200 days sitting about 657. So we got within about 1% of it on the 200-day. That's going to be the next big test, it looks like, to see if those longer-term supports can hold. Of course, Nasdaq has been underperforming as tech has underperformed. You see, though, it's hanging near its 200-day as well. 589, so 200-day, we got to 591, so within 2 points of that today before bouncing a little bit. But again, we got to get our DMI lines, directional movement lines, headed in the right direction. Right now, the bears have the ball on a short-term basis. The disappointing one was the Russell 2000. Thought we were headed for some outperformance on the Russell as long as it held this DMI test point here back at that low around 258. We were hanging, then finally gave it up there on the 5th last week, closing at 256, and then you see the bottom drops out down to a low at 244 here as we get now the negative trend in motion, ADX trending up with the negative DMI leading. That's bearish, not bullish. So bottom line, at least on a short-term basis. Yes, we're holding the 200-day. That's near 240. But so we got close to it. 244 is low. But bottom line is look at the volatility index. I always say that you want to see VIX back under 20. You don't want to see it trending above 20. And you can see what happened all last week. We got above 20, stayed above 20 with a test on the 4th at 20.4, and then surged up to 28, near the 29.5 actually at the end of the week. And that didn't feel like the top, like a spike top. It felt more like a trend. And of course, we spiked even higher this morning to 35. Yes, we're back just to 27.5, but the point is we're still trending in a bearish way on volatility. Once volatility can get back and stay back under this 20 threshold, that would be a much better sign for the markets. In the meantime, you have the risk of these types of surges in volatility, where it went from 30 to 60 in a matter of 2 days last April during the tariff and fears from the Liberation Day announcement from President Trump on April 2nd last year. Point being that we're not out of the woods yet. Bond market, you'd think we get a flight to safety, not much, right? You can see bonds not doing much. And then gold, not much, right? Gold coming back in here over the past week, back into a trading range, and actually our DMI lines actually are on verge of getting broken here. If that breaks, in fact, if you look at the GDX, the gold mining stocks, they just had a test that did break. 102.5 should have held. They closed under it on the 5th at 101.8. So while it looks like it's holding that support line there, it's actually losing it on the DMI lines. Now, it doesn't mean that's the end of the world. You can see last time eventually got it going again. But it just shows you want to be patient. You don't want to commit chips unduly. And of course, watching Bitcoin is another one, that Bitcoin's actually doing a lot better today than the markets. Looks like it's kind of basing out. But again, the DMI line's not quite where they need to be. The rally last week stopped at the DMI near test point of each other there, with the negative line still above the positive. That's still saying that the bears still have the ball. So it's just really right now reminding you that cash is also a legitimate position. We can, of course, we're trading some puts in some services as well, but playing the downside, but also, some upside bounces too. But point being that trading them small and waiting for things to shake out, and be careful about chasing into any immediate like news. Like HIMS, for example, had a positive news of an announcement with Novo Nordisk, and basically that popped the stock initially. But you see, that's just a test point of the DMI lines, and shouldn't be bought into that type of a bounce yet. So bottom line is that you just have a lot of stocks that are broken like that are going to have quite a bit of work to do. Of course, we got to watch, and we didn't look at the Dow. The Dow, likewise, right near its 200-day. You see its 200-day DIA is at 464 or so. Our low today at 466 and 2/3. But the problem is, again, we've got like the Russell, we've got our ADX trending in the wrong direction. We got ADX trending showing a downtrend in motion, at least on the short term. If you compare it to other times you've seen that, last February, we were still pretty early in that before we had the April plunge. I'm not saying we're going to get a plunge that bad, but I'm saying you can't just count on the 200-day to hold you up. You got to wait for those trends in motion to end before it's safe to go back in the water, at least on a short-term basis. So keep all that in mind. I don't want to get you too negative, but also want you to be appropriately protected. Of course, we have a variety of services that are trading puts in addition to calls, where you can protect yourself with some downside plays in addition. So call us at 800-BIG-TRENDS if you have any questions, or drop us an email to clientcare@bigtrends.com. Have a great trading week ahead. I'll see you again at the beginning of next week. Trade well and stay well.